Okay, good afternoon. Welcome, you beautiful human peoples. That's a new one. We have Garweezy in the house. I can see Garwin right there with us. Welcome everybody to this Dollars for Lunch. It is Thursday. We're almost wrapping up the week of our launch. We are having a fantastic week. We're on top of this world. Family's healthy. Trades are going good. We've launched a brand new community that we've just received so much love and feedback on. We hugely appreciate it. We're on top of the world right now. So if you're with us, massive shout out to you. And again, I hope you sit back, relax, and enjoy. I can see Garwin there knows we figured out his secret. Garweezy, not too easy. I think it's something like that. Okay, guys, listen, enough about that. Let's jump into the markets, what is happening around the world. So you will always and fairly often see that once we had some big fundamental data events, the news will start to look a little bit pear-shaped, and you'll start to see a lot of conflicting data on the news front. So let's quickly start off. We're going to look at the news, look at some of the fundamentals, some of the data that's coming out. And in essence, the items that are going to essentially start to make a little bit of an issue is this, stocks retreat from rally, Fed's doubt, creep in, etc. Right. So I don't think, it's anything to worry about. And again, once we've got through some of the basic fundamental data points, it's pretty much important to ignore the fundamentals, right? To ignore some of the news releases and the data points that have come in. In the past, we've kind of ebb and flowed between this idea of saying price action is king, ignore everything else, and just focus on the pure price action side, where some of the fundamentals do matter, right? Unemployment matters, inflation matters. Some of these things really do matter and play a huge role in moving the economy, moving instruments, etc. The things we trade, right? Super important. So what we've learned to do is kind of pay attention to some of the items and just ignore the rest, right? Ignore the fluff, ignore the drama, ignore the politics, just ignore the rest, right? So let's jump into it and let's just have a look at what is important, what do we need to know, and why we can pretty much ignore everything else. Okay, so there's gonna be a bunch of news articles cautioning anybody from any sort of rallies, any sort of upwards momentum movement in the market. So we're gonna ignore that for the time being. Now, as I showed you guys this morning in the Pounds of Breakfast, S&P 500 heat map across the board looks like a bit of a Christmas tree here. Noteworthy mentions are, of course, something like Tesla still doing an additional 2% over the 6 it did yesterday, right? So that's going to be important to be kept in mind. In terms of the fundamentals, we've got pretty much unemployment claims due today, right? Or this afternoon. We've got the Fed manufacturing index that's going to come in. But all we need to really know about this is that higher than expected jobless claims, right, just means that more and more people are filing for unemployment in the US. Again, this is in line with the Fed's goal to reduce inflation. They need to get the unemployment rate up, right? And I know it sounds super counterintuitive. You want to stimulate, you want to save an economy, but they need to get unemployment up in the US, right? I can't remember what it was teetering at the last time on NFP, but they need to get it around to that 4.6%. So a couple million Americans more need to be unemployed to curb inflation. I know it sounds counterintuitive, but it is what it is. Now, the initial jobless claims, if that's higher than expected, negative for the dollar, lower than expected, positive for the dollar, right? At the moment, in terms of continuing jobless claims and initial jobless claims, these are both expected to tick slightly higher. There's an expectation for 220,000 new Americans to file for unemployment, and that continuing number to increase from 1.834 million from last month to 1.847 this month, or in this particular reading. I think it's for this week, if I'm not mistaken. So higher than expected, bad for the dollar, lower than expected, good for the dollar. But for this afternoon, we're pretty much ignoring all of that. We're throwing that out the window. We're going to be facing and dealing with pure price action for this afternoon. Now, we almost sent out an order to sell gold. We paused that order because, again, I just wanted the US session to start, which I'm grateful we waited on, because we're seeing something pretty interesting that I think you're going to love from a trade perspective. And when this plays out, it's going to be the most beautiful price action you've ever seen in your life, right? So we're going to sit back, relax, and observe. If this plays out, it will be beautiful, right? And this is proof. A lot of people look at market structures and say, price is random. This is just charts moving, etc. There's nothing random about it. And this next chart is going to prove it. Not quite the next chart, because we're going to start off on the dollar index. I'll get to gold. There's something I want you to do before I show you this beautiful chart, but we'll get into that in a second, right? So let's start off with the dollar index. And this is pretty much a good summary of where we think the markets are at. And I just wanted to, help you guys a little bit here on this dollar index. And just to observe sometimes, just what the candles are doing, right? And just to sometimes observe you know, the traits of what's happening in a market. And I want you to see something, right? In every market state, this is the dollar index, as I've mentioned, right? In this last market state from the pretty much the 18th of July, we've been in a bull structure, right? And the market structures have reacted in a particular way. But you can kind of say officially this bull market structure had come to some sort of headway or some ending, I would say round about that region, right? So round about that region, markets really started to sort of tip over here. We can see momentum is slowing down to the top side and markets are starting to now move towards the downside on the dollar index perspective, right? Now we start to see a bit of a change in structure where we get these massive move down, these build-ups over a few days, over a trading week and a half, etc. Now we've seen the dump of the market happen on the CPI. In terms of the retail sales from yesterday and the PPI data, it wasn't necessarily massively good for the dollar, but the markets generally weighed this up as overall good for the dollar, right? Positive retail sales. We saw Target beat estimate. We saw Walmart apparently aiming to beat estimate as well. That's also the news. And so that's all stimulating at the moment a healthy, you know, outlook for the dollar. I do expect the dollar to continue building up momentum. The key level here is going to be this 104.47, right? 104.47 in terms of the dollar index. But I want you just to see here that the characteristic for this change in state, this no longer bull market momentum, is that the dollar has these dumps and then it builds up over the space of a week or two, right? And every time there's a change of state, you can start to look at the characteristics of those candlesticks and sort of anticipate what is it trying to tell us. So that being said, right, a quick peek into Euro USD, right? Again, we've sold Euro USD and we are kind of floating at entry on Euro USD. It didn't make that shunt down past the next fib level, right? We were expecting this 23.6 fib level that's just slightly below our entry point, the 1.0832 level. So meaning €1 buying $1.08 and 32 pips. That is our next support level there, right? The idea was that we would see some momentum and we could see a breakthrough. Now, this afternoon's jobless claims may form that catalyst to give us that initial momentum, right? So a lower than expected, great for the dollar. What will cause Euro USD to do? It will dump Euro USD. And ideally here, we want to essentially just break this next fib level. If we break this next fib level, well, you know what that means. It means it'll literally just drop through support. And that should be enough to crash, right? That should be enough. All we need just to crash to that level. We're still in this trade and we can obviously potentially see in anywhere another 35 to 40 pips towards the downside, right? So again, today's fundamental may just be a catalyst. The price action still supports a dumping, right? Anything that goes up must come down. So we've seen Euro USD spike up with CPI, all that other set of data, right? The retracement needs to take place. If I zoom out, and I've shown you guys this one previously, the retracement can happen all the way down to 78.6. So it's 134 pips, 135. Let's call 140 pips rounded off south of our current position per trade. That is a massive trade for a straight FX pair. So that is super, super, super important. Now, real quick, guys, before I show you what we're doing on NASDAQ and before I show you gold in terms of one of the prettiest price action charts you may end up seeing this week, just a quick heads up in terms of our social area, right? I'm no longer going to be sending links to the videos in Telegram, on Instagram, and all these different locations. The links to the shows, to the videos will only be available in the social area. Now, what does this mean, right? This means that if you open up the social area and you go into you at home, right? So I'll quickly share my screen of what that looks like. If you are at home, if you have access in the free area, as an example, the show will pop up and all you have to do is click on that and it'll literally it'll give you the link, you'll have access to it, right? Now, the reason why we're doing that is that as we hit certain pip targets, right, pound dollars for lunch, as we start to trade dollars for lunch live into the New York Stock Exchange Open, into the New York US Open, all these data points, these shows will only be available to Premium Plus subscribers from next week. Okay, so meaning you'll see a link here. In order to get in it, it'll take you through to Premium Plus, where, you know, obviously you need to be subscribed. You need to have that TD Market STP Live account in order to participate, in order to trade with us. So if you don't see a link in the groups, that's because it's being managed by the community, right? So if you're in the free area, it's DVDM Markets normal. If you are in Premium Plus, right, that'll be Premium Plus, and then you'll obviously see the pricing and what that's all about right there. So if you want to jump in, select the link, jump in, and you're sorted out. Now, in addition to that, We will be giving you guys the link to the app, right, which is a shortcut link. If you have Apple or you've got the Play Store, just follow the link, download the app, enter the credentials you've used when you signed up to jump into the social area. And then even more, if you're not in the social media area, guys, what are you doing? Link is down in the description below. Hit it, sign up, provide a little bit of information, give us a little bit of information about you, who's your broker, etc. And that will get you into the social area. And those same credentials you can use for the app to get access. All right, so let's jump in. I promised you guys a few things here. But first and foremost, we are going to quickly have a look at NASDAQ, right? Now, we had a little bit of pending order set up this morning, a sell limit for US30. We decided not to give it out just purely because of the fact that after, PPI, CPI, all these other things, markets can tend to sort of not move around price action. I'm very happy to see and report that price action is still holding out perfectly fine, right? Even after some of the fundamental data releases, which is good. It shows a healthy, normal, stimulated market with a ton of volume and good players involved here, right? So we had a limit order. We discussed it this morning. I thought we were going to end up sending it. It was a slight miscommunication. I'm fine that we didn't send it, but ultimately market structures are playing out. Everything is perfectly fine. NASDAQ, we are still no sells from that 15,840 mark, right? So if you are on those sells still, you should be running over 600 pips per position as we speak right now, right? So this may still be the trade of the week as we obviously see that one run. Now, again, remember, our commitment to the free area is a minimum of 500 pips per week. On NASDAQ, right, we've already yielded, we've banked and sealed up 1,200 pips with another 600 pips running. And this still has a potential to dump even further to the next TP, which is an additional 1,000 pips towards that south side. So even though we didn't get in the US30 sell or limit trade, we do still have our NASDAQ trade. Now, I hope you guys are in those US 100 or NASDAQ trades. If you are in that NASDAQ trade, please put your hands up in the comments. Need to know that you guys are in it. If you're not in it, I don't know what you're doing. That's what it's all about, right? Now, yes, we lost that gold trade. It's unfortunate we lost a gold trade for about 100 pips, but we've banked 1,200. To lose 100 when you've banked 1,200 pips, that's what it's all about. Lose small, win big. That's what trading is all about. That's all it's about. Now, I've already showed you guys the social area, so I can move on into gold. But in essence, this is what I wanted to show you from a pure price action perspective on gold, right? I'll maybe make it a 30-minute chart and I'll zoom in just so you can see how beautiful the price action is currently playing out on gold. Now, there's two important things to consider here. When we see commodities have good price action, good structure, right, this tells us we're in a healthy state of market, right? That is why when we receive crazy fundamentals, when we receive NFP, I generally don't like to trade the day after, or primarily even on the day of something like NFP, CPI, because it throws out all the price action. It's just, a bunch of volume in the market. The market needs to move, balance itself out, have an equilibrium, and come back to normal and normalize itself. And that generally happens, and we can see that through price action. But we are seeing pure price action play out. We're seeing some really good market structure. So this is currently looking at gold on a 30-minute time frame. So obviously we had that gold breakout as a result of CPI. It overshot a little bit. The true resistance level was actually sitting at that 1963 from the 14th. In terms of that, on Tuesday, the CPI release, the actual resistance was there. It overshot, no problem, came back into support, came back in structure, reshot, made that high, gave us all the data we needed for this next channel. Now, I initially drew that channel already on the next day, on Wednesday, prior to receiving that high in its full force. And I estimated this is, what we could be seeing, right? We saw then with the retail sales data, or the data on the 15th, apologies, I think it was the retail and PPI. We saw the dollar take a bit of strength there, which obviously causes gold to sell off. And then we saw, and the reason why we created that sell yesterday, which is the sell that we lost in full transparency, is that we broke market structure, but I was in the back of my mind a little bit cautious of a potential retest of market structure, right? As we've seen before. I think it was US30. There we go. So US30 did a very, very similar thing last week, right? Where it broke out of structure, but yet targeted those higher levels, but still honored the diagonal. Once was support, now resistance, right? So we've seen this happen in the past. I was a little bit worried about that, and I was a little bit cautious about that today for issuing a secondary sell. Now, listen, and guys, vote 1 if this is a beautiful price action market structure, or vote 2 if you don't know what you're doing and why you're even looking at this chart. I'm hoping there's a lot more ones than two. It'll give me a lot of confidence in you guys. But in essence, what we're looking for here is a little bit of a push through into this value proposition, right? Now, the reason this area is so important is two reasons, right? First reason is that we saw this area giving away. This is basically the edge of liquidity that CPI revealed to us, right? CPI came through, markets pushed as far as they could to get to this next level. And that was essentially the edge of liquidity. That was when liquidity and volume ran out to this level. We started to see retracement. You started to see buyers now forcefully getting back in to cause a retracement. That's the first reason. The second reason is that is actually the true resistance of this level that CPI pushed into, right? Second thing is that we broke through that level temporarily as we rebuilt on Wednesday. But the second we got through that level, we saw that massive amount of volume and we saw markets crash. If we go down to a smaller time frame, you will actually see the imbalance at that level where markets literally fell through as if there was nothing there whatsoever to support markets. So that tells me markets want to target that one more time before we receive any sort of collapse here, before we receive any sort of major sell-off. Now, the perfect storm would of course be that we do get that unemployment data that we see. More and more people filed for unemployment closer to that level. The team is prepared already. This order, the trade is set up, the screenshot has been taken, the levels are there. And so we might go ahead with a limit order. We might issue a limit order into the community. However, I would have liked rather to see the unemployment data come out. And what we might end up seeing this afternoon is potentially one of two things. Well, there's always only ever potentially one or two things, right? But ultimately, we could see data that comes out weaker than expected, right? Or under expectation that will fuel the dollar, and we'll just see a gold drop, right? There's nothing we can do about that, right? In that particular case, we do have a strategy here that should catch that trade. And that is pretty much by essentially catching an order just at that zone right here where you see my finger, right? Which is essentially what we tried to catch yesterday, but maybe we were just a little bit early. And so we might issue a sell stop at that level. The other alternative is that that data does come through and it is weaker for the dollar, meaning more people file for unemployment claims than what they expect or what economists expect. And again, I don't know who these economists are, but most of the times I think they're smoking crack because their numbers are never accurate, but that's a separate story for a different day. But should it come out higher than expected, we should see that slightly weaker dollar. Gold will take advantage of that. I'm very, very curious in that particular case, will gold stop out at that 1969, 1970 flat level? It's a massive psychological level. It's hugely important to the price of gold. And that's essentially what I'm very curious about. I would be super excited to see, dollar or gold bulls push price into that level. And I'd like to see they run out of steam at that level. If they do, and we start to see volume sort of thin out at that level, that's where we will issue a sell limit, or we'll issue a sell stop if markets then fall back through that price. So gold is something I'm super excited for. And if this price action plays out, it will be probably, I would say, the price action chart of the month. Just from a beauty and simplicity perspective, you don't need to be a rocket scientist to see that, there's just such beautiful market structure. Yes, there'll be exceptions, but you got to ignore that. You got to cut that out, right? So now moving on to Bitcoin. We obviously spoke about this yesterday, and just a quick wrap up on Bitcoin, just so you guys have all the information that you absolutely need. Frank is going 111, so that means we're on the same page. I can see Galweezy is lots of ones there. Sipo's ones, Marquez ones, Mr. Baloy, that is our dear Musa at TD Markets, is one. Ruschua has to be 3. I thought Ruschua was going to be like a 6 or 9 or a 69, but anyway, that's a different story. And Frank is, I think I did mention Frank is also on a 1 there. So beautiful stuff. We did speak about Bitcoin recently, and we are seeing a little bit of a sell-off in this area. Now we will dive a little bit deeper just to make sure where exactly is this level. The round psychological level of $40,000 to a coin is there just inherently because of its nature of being a super round number in the price of Bitcoin. So we will obviously keep quite a bit of information. We'll keep monitoring this quite closely. However, what I would do if I was you is 2 things. A, really consider whether you have any sort of crypto in your portfolio. Now again, I'm not speaking about this from an investment advice perspective. Nothing we do here is investment advice whatsoever. Everything we do here is for education and entertainment purposes only. But I want to ask you a question, and that major question is, do you have any sort of crypto within your portfolio? Right? Whether it be, you know, alternative coins, whether it be some of the main headliners, whether it be Ethereum, whether it be Bitcoin, any of these, that's the first question. I want you to ask yourself, do you have any coins, and do you think it is worthwhile to have any coins? I'd love to know your answers in the comments of this video, or even drop it in our new social community. What's your thoughts and opinions about holding any sort of coin whatsoever? Because the second part that I want to ask you is that what will happen, and I can pretty much tell you this is going to happen before it even happens. And again, this isn't rubbing a glass ball, but this is simply just taking what the markets have done in the past when Bitcoin has exceeded some of these ranges, right? In the past, when Bitcoin exceeded $40,000 to a coin. So I went back into news articles and publications when we saw BTC in terms of the hashtag trending the most. And that was every single time that Bitcoin went over the $40,000 to a coin mark, people lost their minds. People were selling their grandmothers, people were auctioning their houses off to buy Bitcoin, right? And again, that is never a good idea. Never put into the markets anything that you aren't prepared to lose. You understand this is extremely risky. We're all on the same page with that one. But every time Bitcoin went over the 40,000 mark, the markets lost their minds. Now, that didn't affect Bitcoin all too much. Yes, we saw Bitcoin spikes up to $70,000. But what it did do is it dragged the rest of the market with it. It created a hype cycle in the market that pretty much dragged the rest of the market with it, right? And so that is where, you know, I would, you know, urge you to consider looking at alternative coins that have the right technology. And we will have separate shows about this, because I think it's now the time to start getting into more of the blockchain and crypto space. You know, what alternative coins am I looking at? What do I think it'd be the right things to consider when looking at a coin? What is the right technologies to back? Who's doing big things, etc. So just a thought, food for thought I'd like you guys to think about. But ultimately, moving back to the charts, before I ramble or for all too much longer, we may wait for the data to come out because we are only about 6 minutes away. We may have to do a quick camera battery change, but alternatively, or basically what we're waiting out for, and what I would do if I was you, is set a alert at these levels, right? So make sure that $40,000 is an alert level that you are well aware of, because again, as much as we are anticipating the $40,000 being hit and potentially retracing, right? And again, just, you know, coming back down to a level of support, we highlighted that level that very well could come back to in that area right there. If it gets there and it actually goes through that level, again, it's going to be Armageddon, right? Everyone's going to be losing their minds, selling their grandmothers, as I've mentioned before. So you don't want to be caught in the back foot. We're traders. We want to know about these things before they happen. So what we're looking out for this afternoon is we're looking at gold very seriously. We obviously are paying a lot of attention to NASDAQ. The fact that these two are moving and they desynced, right, tells me we want to be a little bit cautious here. US 30 seems to be following a little bit of a corrective measure, but certainly building up momentum on the start of this US Open, right? Because we have the US Open at 3, we have the dates coming out 3:30, the New York Stock Exchange opening up at 4:30, all GMT plus 2 times. So very interesting this afternoon, whether we're going to see that hit. If I was you, I'd put an alert on your system at that 1979 level, and then just double check in the social area if we've issued out a trade opportunity for that trade, right? That'll be super important. Now, if you haven't done so already, in the school app, right, when you go into the school environment, right, if you on the actual, you know, in the environment itself, there are some settings you can choose, whether you like to be notified, etc. But the more important part that I'd like to maybe help you guys with is when you go to the app itself, right? If you go to the app on your phone and you select on the options on the app, right, you go ahead and then select to allow for push notifications to come through to your phone, right? If you do that, every time we post, you'll actually get a notification like a WhatsApp, like a Telegram, so you never miss out on a trade. I had quite a few people saying, you know, they weren't getting the notifications, or they were just somehow missing it, and that's due to the permissions not being set. So you definitely want to go ahead and do that. So let's see. Look, we've got a few minutes left. I don't think it's going to be super important to observe the news coming out, or observe the numbers they're going to be pulling through. Again, super simple. If the claims come out higher than expected, just as a quick summary, higher than expected, we know that's going to be bad for the dollar. Lower than expected, good for the dollar. Good for the dollar will mean a gold sell. Bad for the dollar would mean a gold buy. However, I'm not looking at buying gold until either we crush this level and we go back into market structure, right? So this could have been just a fake out in totality, but that's going to be the key zone for me. As I mentioned, that 1969 level, key for me to decide that next trajectory of where we are busy going, right? I know there's quite a few of you that sold gold already from the retail sales data, from the PPI data. If you did, well done, absolute machines. You killed it, you're good to go. We played it safe. We only had pretty much our NASDAQ trade sitting at this level down below. And we chose not to issue anything on the data from yesterday, as I covered in the pounds for breakfast. The mixed bag, we don't issue trades, right? It's far better to sit back, let price action play out, which it did, and ultimately resulted in a really, really good trade to that downside. Okay, beautiful stuff, guys. Listen, and just a quick one: if you don't have your TDM, your TD Markets live STP account opened, don't know what you guys are doing. If you're with any other broker, if you're with HFM, any of the others out there, you've lost your mind. You have to be with TD Markets, guys. We have got a pure STP environment, the best execution environment you can get out there. You know, essentially it's the Rolls Royce of trading environments. This is not even something that actual retail traders use or get access to, right? I want to encourage you guys to do something, and I want to take it one step further, right? We had a meeting with the CEO of TD Markets. We've had multiple meetings prior to doing the actual deal itself. I think this is quite important. I'm going to share this with you. It's more important than the fundamental data coming out. And we put together all of our leaders in a room, in a online meeting. There was about 30 of us, and really it was about a questions and answers situation, right? A lot of people understand A book, a lot of people understand B book. Very few people understand STP and how, you know, robust it is and why it's built to actually be an institutional solution, not a retail solution, right? And we had Amar, who's the CEO of TD Markets, as well as his technical team. Musa was there. A lot of the executive team was there. And it was really a questions and answers situation where, you know, the team really graced us with further details that I think a lot of people don't understand when it comes to an STP setup and how robust it is, right? And again, it's the difference of you being a trader and deciding you want to trade utilizing a Toyota Corolla, or you want to trade using a BMW. And Toyota Corolla to a BMW, it's a bit of a step up. When we talk about an STP environment, we're talking about trading in a Rolls Royce or a Bentley, right? That is the significant step up from a 3 Series BMW to a luxury automobile, right? And so what I'm thinking of doing is I will share with you guys. Someone is asking, is Rich K, is TD Markets the same as TD Ameritrade? No, I don't think it is. No, so there's a multitude. So TD Markets has a multitude of subsidiaries, massive institutional solutions for businesses around the world, and a lot of their service offering is actually banks and institutional clients. We'll share more information. Actually, in the video itself, you get a lot of information. So I will be sharing that in our social area. However, I'm going to be doing it for this reason, right? I just quickly want to have a look at the data that's come out. Okay, this is hectic. Let's quickly switch to this and I'll tell you guys about that interview I'm going to give you guys access to, right? Data is negative. Goweezy shout out there, called it out. So substantially over the numbers there. So that may mean we want to potentially, I think we can hold NASDAQ. I don't think that's going to make a significant difference there. But this is now the important part, right? What gold chooses to do at this level is going to be super important. I'm very curious now what gold's going to do. So what gold does in the next 2-3 minutes is going to pretty much determine what we end up doing at this level. If gold fails to get through this level and just settles in this area, it's going to show us that there's no more legs or buyers in gold, that there's more trust in the dollar, even though more and more people are filing for unemployment. The reason why this is a good news, bad news situation, right, is understanding that the Federal Reserve's goal to curbing or flattening interest rates and potentially in the next year signaling for the drop of interest rates is they need to see unemployment rise, right? So what do you need to do to see unemployment rise? You need more and more people to file for unemployment. right? You need more and more people unemployed to see the rate rise. So even though it's a big number, I'm very, very, very curious whether we are going to see the data stall at this level. We see price stall, and if I look next to me here, it definitely looks like the price of gold at that level is not shooting through. It's not going paired. It's not going through the sky, right? Let's have a look here. Just close the positions of GBP/USD. Beautiful stuff. Just protect yourself there. But I think particularly on gold, this is what we're going to be very, very keen to look at. If we see a push through and markets get above this level, then amazing, right? 1975, 1976, we can start to look for long positions. But failing this current position at that market price, that's going to give us some serious ammunition against a short in gold. If the markets don't take this information and run with it, then we know there's a major weakness in that rally in the price of gold, right? The only other item I didn't have a look at is that Fed manufacturing index. Still a negative number, negative 0.59, but not full -9. So slightly positive, but not great. And I don't think there's anything else that we will see here outside of the New York Stock Exchange open. So this is, I think, what we're going to do to play it safe this afternoon, or have a solid strategy in what to do, right? We are going to more than likely wait for the New York Stock Exchange. Now, that is an hour away from where we are now. But what that will allow us to do is allow this market to play out whatever it wants to do here. If it wants to push up, if you guys are riding that weaker dollar data, good for you, right? There's nothing wrong with that whatsoever. I'm only cautious because of the fact that NASDAQ has not reacted whatsoever. US 30 initially reacted and pulled back down. Apologies, that's behind me there. So US 30 reacted and pulled back down. NASDAQ did not react anything significant. And we're obviously seeing gold, hit that level there. So I'm very, very curious whether that still subsides or that's still in that level by the time New York Stock Exchange happens. And if the New York Stock Exchange happens and we see momentum towards one direction or another, that'll give us that confirmation. If New York Stock Exchange starts to make these higher moves on indices and gold, we will follow that. If it starts to reject off these levels, we will then sell fairly hard off of that level. So gold seems to be pressing quite high into that level. And again, I'm super glad we did not reissue a sell, just in terms of that pending data there. Now, this is maybe one of those cases where it's great not to place a trade prior to this data. I still am very, very curious to see whether we see gold hit that level and or reject. I might end up after the show just placing a few tiny sells while gold is super high. In the event that it rejects and comes back down, we've got a nice early sell in that level. But again, we will issue a formal trade or formal opportunity. Again, it's not financial advice, it's an opportunity whether you choose to take or not, but we will issue that in the social community around about that 1969 level. So see gold pull back on the New York Stock Exchange, that'll be our entry point. Just having a look here, Bitcoin not reacting all too much, USD/CHF not too much. The dollar technically is taking a bit of a bath across its competitors on the daily. I just want to go into the 30. We will see a sell-off on the 30, but not significant, not substantial. Right, again, just to give you a bit of a frame of reference, that is CPI, right? There is PPI, or retail sales data, and this is what we're seeing right now with the unemployment data. So taking a little bit of a knock here, but I think still within general price action. I don't think anything that's going to change the market too much. So again, with all of these fundamental data points, I take them with a pinch of salt. However the markets react first is never always the way it's going to run for an extended period of time. We want to see that play out. We want to see markets hold price. If it does, great, we will follow that. If it doesn't, then obviously we will get away from it, right? Gobizi saying Euro USD climbing. We want to see if it rejects. Similar type of story here. We're trapped between these two levels. If Euro USD, gets any further higher after the New York Stock Exchange open, then obviously we'll change a lot of our biases. We'll take some of the money we've banked on NASDAQ already, and we may chase some other positions, right? Again, on NASDAQ, we have moved our position to entry, right? So your stop loss should already be at entry on this one. So we have zero risk on NASDAQ. We do have some running risk on Euro USD, but again, we've banked substantial amounts of money already on the NASDAQ to afford any sort of losses on Euro USD and still be well over 1,000 pips clear for the week already. The only big question is, can we catch gold? And if we can, how much can we catch? If we can still catch a 200 pip sell off on gold, that will close up this week to be an amazing, amazing, amazing week whatsoever. It will just not compare. A launch, family's good, everyone's happy, everyone's healthy, everyone's loving the community, and we close in a good amount of pips. That'll be a solid week to celebrate and obviously have some good fun with. Right, so back to the bigger thing I was speaking about in terms of that interview. So I know I made it available somewhere. Is it in the social area? It is in the social area. Okay, so it is in the social area. However, what we're going to do, let me show you guys really quickly. So if you guys go into the social area, right, you will see here there's a link to the TD Markets Q&A webinar, right? It's the second option over there. However, you need to be at a certain level to access it, right? Q&A recap session, right? Now this is with the executive team of TD Markets to fully understand what is an STP environment, how does it work, how does trade receipts work, you know, why did we go with a Rolls Royce when we're just retail trading, right? When we're not at an institutional level, we hope to be sometime soon, but not right now for what we're doing, right? So what is this all about? You just need to be, I think it's a level 2 or 3, a level 2, right? So level 2 unlocks access to this video. How do you get to a level 2, right? Level 2 is very, very simple, right? When you interact with the community, when you click on things, when you comment, when you post, you upgrade, you move in certain ranks and or levels, right? And so when you hit that level 2, right, a certain amount of points, you then move into level 2 and then you have access to that Q&A webinar. So we're going to hide amazing things throughout the community that as you reach new levels, you have access to new things, right? That is the beauty of the system that we've obviously set up here for you. You want to understand what an STP system is and why it is so important to have, then go ahead and watch it. If you don't have your TD Markets live account as yet, again, the link is down in the description for you to get that. And that gets you access into Premium Plus for a discounted rate of less than $1 a day. So we're just going to keep an eye on the markets. Gold is having a slight little pullback here. I'm going to get on the line with the team and we're going to just do some further analysis prior to sending off any sort of trade opportunities here. We're seeing markets slowly build a bit of steam. It'll be very interesting where the New York Stock Exchange takes this data and runs with it. They take this dollar weakness and run with it, or they don't, right? I think the markets will want to capitalize on this. It may be only the investor grade decisions later that see that, listen, unemployment raising or higher people unemployed or filing for unemployment is actually a good thing long term. But we also understand this is maybe another side of the coin that I didn't mention and worthwhile considering. More people filing for unemployment is closer in line with the Fed's goal. Okay. And if the Fed achieves their goal, they will either curb interest rates or raising interest rates, which I think we're already there. I think that's been fairly well indicated. They mentioned there may be room for another interest rate increase before the end of the year, but I think we're pretty much there with opportunities to drop interest rates next year. Now, the thing to consider here is that dropping of interest rates will weaken the dollar, right? So it may be that combination of more people filing for unemployment. That's obviously bad for the dollar, but it also hints towards a future in which we live with a weaker dollar, which needed to drop in any event. We've been speaking about this for the last couple of months, and it is due. It is time, right, for that dollar to drop its value against the world. However, the only caveat here that we have that we just need to understand from a geopolitical perspective is that any sort of outside tensions, we know we've got some political issues around the world at the moment. A lot of these things unfortunately tend to stimulate the dollar. People tend to run to the dollar as a world reserve currency, and it tends to boost the dollar. So as much as we could have a economic forecast from a interest rate or inflation perspective, right, there's always these external geopolitical issues that can just throw a curveball and just start stimulating the dollar out of nowhere. So just a side note that we need to consider. But listen, there's not a bias thing. It's the price action. If the price action on the New York Stock Exchange shows there's volume to the top side, there's buyers that are willing to drive these commodities and indices higher, we are all for it. We are in it. We will rally with them, and we go where the market goes. We're not trading against the market. We're trading with the market, and that's what we will do this afternoon. So key level we are testing right now. Could end up developing anything here. We could develop a head and shoulders. We could develop anything. I would just like to see price action win here. I'd like to see rejection. I'd like to see a sell-off. I'd like to catch that sell-off. I'd like to end the week strong. I'd like to see Trump dancing by the time I'm with you guys tomorrow morning. Now, just a quick one. Tomorrow morning, we do have pounds for breakfast. It will be issued at 7 a.m. ready and fresh for you as a summary of the week. We'll recap all the trades, all the positions, all the ones we banked, all the ones we've lost, everything, full transparency. And that's why we do what we do at DVDM Markets. But that'll also be the last show of the week. From next week, we will have pounds for breakfast every day. If you are in the free environment, and dollars for lunch only in on Wednesday in the free environment. Dollars for lunch will be in Premium Plus, right? Dollars for lunch, we will trade through the US sessions together. So it'll be a little bit more of an extended trading Q&A. We'll have some fun, play some music, talk rubbish, trade, right? That is the value proposition within Premium Plus itself. So again, if next week you're not seeing Premium Plus shows, it's because you're in the free environment. It may be time to upgrade. Other than that, guys, listen, we love you. We appreciate you. As always, trade safe. Stay tuned for opportunities and updates within the social media area. And as all, we know you guys are having a good time. Continue to use the service. Give us your feedback. As always, we love it. We appreciate it. And listen, Musa is always available if you need help with your TD Markets live account. If you haven't got your documents uploaded, reach out. Ask him. Say, hey guys, I need some help here. We'll drop his details in the social area. If you need any help, he's the guy to contact. He will get you sorted out. Other than that, you know the drill. Much love. See you guys a little bit later. Goodbye.